Okay, good morning, good afternoon, everybody. This is Bill Neville with the Entrust Group. Thanks for joining us on our monthly educational webinar that we do. And really happy to have my friend Neal Bawa on to do an obviously very timely presentation on what will be coronavirus's impact on real estate stocks and daily life. So Neal and I have known each other for, I don't know, a handful or so of years now. And he's here in the Bay Area, and he has been doing a presentation on an annual basis, doing a report about the real estate market in the country and best places to invest. And it's a very data-driven presentation. And I first attended Neal's presentation, I don't know, 3-4 years or so ago, and told him shortly after that, I'd really like to have you on to do this for our audience, to come on and do that as a presentation. And so last year, around this time, he came on and he did it, and planned on basically having that become an annual sort of thing for us. And then real life took over here with the pandemic, and Neal reached out and said, hey, I've got something a little bit different that your audience might be interested in. It's about the coronavirus impact. And so here we are today. So I'm going to just do my usual sort of beginning part of talking about Entrust, and then I'm going to let Neal take over. And I appreciate you all being here, and I really think you're going to get a lot of value and find this tremendously interesting. So the first thing that we always bring up about the Entrust Group is we do not provide advice or give any, we're not lawyers, we're not CPAs, we're not advisors. We are a third-party custodian and record keeper for self-directed retirement accounts. So if you are considering investing in an alternative asset, like real estate, precious metals, private placements, things like that, we do encourage you to talk with an advisor, a CPA, or somebody like that. But it will not be anybody at Entrust that's going to give you any kind of advice before you enter into an investment. This is what we're going to talk about, a little bit about Entrust, what exactly is a self-directed IRA, what are the benefits. I'm going to just take 2 minutes to go through that, and then I'm going to let Neal take over, and then how to open an account and move forward if you do want to open an account, and then we're going to have Q&A. You will notice in the GoToWebinar, there is a question section. Please do enter any questions that you have for myself or Neal, and we will answer those at the end. We will answer every single question. So if you think of a question in the middle of it, go ahead and type it in, and we're going to answer them all at the end. A little bit about Entrust. We are a self-directed IRA, retirement account, record keeper, and the Entrust Group is the record keeper. The Entrust Trust Company is the custodian. We've been in business for almost 40 years. 1981 is when the owner of our company started the business. We have over 22,000 accounts. We hold, actually that's a little low number, I think. We're a little bit over $3.5 billion. And the big difference between Entrust and our competitors is that we provide you a single point of contact. So anybody who established an account with Entrust, you are assigned a business development manager as a rep. So if you have any questions, need any assistance, you know exactly who to reach out to. I am one of those. We are a leading provider of education specifically around self-directed retirement accounts. The majority of us are certified IRA service professionals. We have offices throughout the United States. I have 3 business development manager counterparts in New Jersey, Tennessee, and Southern California. We are a leading educator. We're the only company that has a national continuing education program where you can get realtors, CPAs, or financial advisors. We have a class to provide continuing education credits if you're looking for that. We do a lot of events, and then we have what's called the IRA Academy, where we train competitors, we train other retirement account custodians on passing the CISP. We're the only company that has that designation that can do that. So what exactly is a self-directed IRA? Go ahead, Neal. First of all, self-directed is not a type of an IRA. Type of IRA is either traditional Roth, SEP simple, and then we also have an individual 401k. a health savings account, and a Coverdale educational savings account. So you will establish a type of account with us, and then whatever type of account that you have, by having Entrust as the custodian, means that you can self-direct it into whatever investment you want to hold. So if you want to hold an alternative asset, you can hold that with us as long as you're not violating the Internal Revenue Code by that by making that transaction. So we are regulated by the Internal Revenue Code, just like a bank or brokerage firm. We have a platform. We are a platform provider that provides the administration and custody of any assets you want to hold. We do not offer investments. We are a platform provider. And by having a self-directed IRA, it provides you the ability to diversify into non-traditional assets and not just be limited to stocks, bonds, and mutual funds. And you, as the account holder, you do all your own due diligence and research on whatever investment it is that you want to make. So what are the benefits? You make all your own investment choices. If you know real estate, this gives you the opportunity to invest in real estate. If you know of a private fund or a private company that's looking for investors and you think it's a good investment, this affords you the opportunity to make that investment and hold it inside your retirement account. So again, instead of just being limited to stocks, bonds, and mutual funds, you can invest in other types of assets, and specifically invest in assets that perhaps you know and understand better than the stock market. And then by having your IRA, you get the tax benefit. So if you're holding real estate, all the rental income goes directly to your retirement account, and there's no tax consequences to that. It's either tax deferred or tax free, depending upon the type of account you have. So it's tax sheltered. There is no tax consequences as long as it's held inside the retirement account. Okay, I'm going to pass it on to Neal for the actual interesting part of the presentation. Again, Neal, appreciate you doing this, and take it from here.
Thanks so much, Bill. Thanks for having me back on the Entrust platform. You know, you see something in front of you. You see the updated April 6th. I've never had a presentation that completely went out of date in just a week. So we've had to actually update this presentation every single week. And already more than 50% of the slides have gone away. They're no longer relevant. And then new content has been added. That's because we are witnessing the most powerful black swan event in modern history. Not since World War II have we faced such a massive challenge. And this presentation is critical knowledge, but I warn you, it's not Netflix binge watching. And I'm not here to scare you, but the fact that you're in this webinar means that you are concerned about the effect of coronavirus on the economy and on your own wealth, and you want data and you want ideas on how you can safeguard your assets. And that's what this is about. Great ideas for living and investing in a post-corona world. So I'll start off with a super quick intro about me. I'm the guy that's super duper relieved that he has no investments in the stock market or in hotels or airlines. I live on the quiet little apartment real estate side of the pond where the investing is not as sexy or addictive as the stock market or startups. But boy, I'm super happy today to be the slow and steady turtle, not the speedy rabbit. These are some of the apartment and self-storage communities that we have either bought or built. And I really thank myself for being in an industry today where I have the cash flow to cushion the sharp pain that is about to come. We've been checking our community's cash flow, and most of them can pay a year of mortgage, even if their rents fall 50%. Then just so you know, we just tallied up our April rents for the first 8 days of April, and we are absolutely delighted. I mean, there were a lot of gloom doom scenarios about what would happen to rents, and we haven't seen anything like that. All of our properties have higher delinquency than they did in March, but the higher delinquency is very, very, very manageable. So far, so good on the real estate side. The good news is I don't have to go through this super boring slide because Bill already did that. Thank you, Bill. We are recording this webinar, by the way. And so here's our agenda today, right? So you notice immediately that the first part of my presentation, boom, gone. It's no longer relevant. So now we're basically talking about, you know, whether we actually, what are the numbers showing? Did we need a full lockdown, and how long do we need a full lockdown? Is it likely to be a 4-week or 6-week process, or is it going to be 6 months? And then this I need to update this. I updated the header, but not this section. Is a recession coming? That question's already been answered. The question that we're going to now ask ourselves is, how deep a recession are we talking about in the United States? Because the economy is in a recession as of today. Then we're going to go talk about that $2 trillion stimulus package and its impact on real estate and on other asset classes. And then we'll move on to talking specifically about real estate. And we're going to talk about all kinds of real estate, everything from student housing, senior housing, single family, multifamily, malls, strip malls, hotels. We're going to talk about all of those with a couple of extra slides about the hotels and the Airbnb market, because the impact there has been absolutely devastating. And then we're going to finish off this presentation with a little bit about the stock market. I'm not a stock market guy, but I think one of my points in presenting this is that whenever there's blood in the water, there's actually more opportunity. But I've seen investors freeze when it's the time to buy, right? So you are going to see a lot of opportunities in the marketplace. And I wanted to highlight that even the stock market today has some outstanding opportunities. I don't invest in the stock market, but I'll tell you what shares I've purchased and how they've done in the last 3 or 4 weeks, because I've jumped into the market because there's so much blood in the water. And then if you have a chance, if you have time, it depends on whether we have time, I'll tell you a little bit about how we are protecting our communities. A lot of you are real estate investors, so a lot of you are thinking, okay, how do I protect myself from a legal perspective and a financial perspective? So we'll tell you what best practices we are following, and some of these are industry best practices about talking with your tenants. All right, so impact on your life. This crisis evolved so quickly that this section of the presentation has been rewritten. We actually had to send it to Entrust again yesterday because so much has changed. And we're going to focus on quarantines. So the first thing is, the U.S. outbreak was the fastest in the world. No other country in the world had an outbreak as bad as ours. And you can see that right here, right? So you see Singapore and Japan down here did a phenomenal job, so did South Korea. And then you had a cluster of countries here, France, China, Iran, and some of these are not named, but there's Germany and Spain and a number of others. But you notice that the line that actually is moving up the sharpest is the United States. We have had unquestionably the worst outbreak so far in the developed world. And here is proof of that. So you look at infection counts and you look at different countries, right? So you see USA, Italy, Spain. And firstly, you notice that our infection count is massively higher than everybody else's, okay? Now, that's not important because obviously the US has a higher population than Italy or Spain or South Korea, so it only makes sense that our infection count would be higher. So how do you do an apples to apples comparison between small countries and big countries to figure out just how bad it was? Well, what you look at is the 5-day infection growth rate. So what we call coronavirusrealestate.com, and each day we update the daily growth numbers, because we found that looking at the infection count, now you get into all sorts of things about, is this country testing more? Is this country testing less? And so you get into the weeds. But regardless of the testing, the daily growth rate gives you a clean way to compare countries to each other. And as you can see, no one in the world comes close to us. This is 10%. Here's the good news. This is awesome, because I'm going to show you where it was 20 days ago. So what's changed from 20 days ago is that we have shelter in place. Over 300 million Americans are in shelter in place. 42 states are in lockdown. This map actually needs to be updated at this point in time because some other states have gone in shelter in place. And there's been a lot of discussions in the investor community. Folks like you that have money to invest are like, did we really need to do this, right? So that's a good question to answer so that you can actually apply that knowledge looking forward to the next phase. Currently, we are in the phase that is known as the hammer. The hammer is the phase where you basically hammer down the virus and bring the cases pretty much down to zero. That's what China did before they reopened. They took their new cases down to zero. So you hammer it down. And then the second phase, which we will begin now between March 10th and May 10th and May 20th of this year, is known as the dance. The dance is where you know that the virus is still circulating in some parts of your community, but you cannot leave your country closed. The economic damage that we've done in the last 30 days is so incredibly devastating that we will not have an economy if we leave it closed. So during the dance is where, and this is the risky portion, we will know how many times we have to open and shut down the economy at a partial level. But first, let's answer that important question. Did we have to go into a shutdown? And the answer is absolutely. So US infection rates were rising at 21% on average in March. And because this is what is known as an exponential curve, these numbers get big very fast. The human mind has trouble comprehending exponential curves. We think 1, 2, 3, 4, 5. The virus thinks 1, 10, 100, 1,000, 10,000. So we've gone from 1 to 5 in the same time that it takes the virus to go from 1 to 10,000. I can tell you that if I extrapolate a 21% average growth rate in March, by the end of April, more than half of America would be infected. We'd be looking at 10 million deaths. Now, I'm happy to tell you that is no longer our scenario, but it was our scenario 16 days ago. So take a look at this graph. This is March 22nd, and I'm comparing US versus Italy. Most Americans think that Italy has the worst outbreak in the world. That's not true. We have the worst outbreak in the world. And here's proof. This is our daily growth rate from March 1st on the left to March 22nd. Now notice that it's very, very high. 30% daily growth rate means that in one more month, we would infect pretty much everybody in America, maybe 2/3 of America. Now you're looking at Italy and you're going, but Neal, Italy must be much worse, right? Take a look. That's Italy in blue, right? Their infection rate on March 1st compared to their infection rate on March 22nd. And you notice that our infection rate is accelerating. And on March 22nd, one state in the union was in lockdown, and that was California. My home state went into lockdown on the 20th, and 3 days after that, we started to see somewhat of a decline. That's why I picked this particular date, so I can show you the difference between the pre-lockdown and the post-lockdown in a way that I haven't seen the media do. All right, so now here's my hero slide, right? This is March 22nd. Now let me flip the slide over to April 6th, day before yesterday, right? Here's the US. And here's Italy. And you see the massive difference that lockdowns make? The answer is we never had a choice. Trump didn't have a choice. The CDC didn't have a choice. Dr. Fauci didn't have a choice. The only choice that was real was when you were going to shut down, not whether you were going to shut down or not. Because if you didn't shut down, you're going to end up with 8 million deaths. And the consequences, not just the health consequences, but the economic consequences of killing 8 million Americans in a 90-day time frame would tank our economy for decades, not years, but decades, because those 8 million people, 7 million of them were over the age of 70. And people over the age of 70 hold a very large percentage of the assets in the US. Imagine 7 million probate cases. The devastation that would cause just in the real estate markets was unfathomable. It's not something that we can even think of. All real estate in the United States would have become illiquid. The good news is we did the right thing, or I should say various governors did the right thing. 42 states went into lockdown, and now we're seeing these trends. And by the way, it continues to decline. So in the last 2 days, we haven't seen anything different. We see that continuation. You know what's interesting is, despite all this talk about more testing, less testing, and all of that stuff, because I'm tracking this trend for 10 different countries, some in Europe, some in Asia, ourselves, do you know that this line looks exactly the same for all of them? So it doesn't matter if you're testing more or not. The impact of lockdowns is that it kills the virus at the same rate for any country in the world. So lockdowns are obviously ridiculously effective. So there's no doubt that we are going to win the lockdown phase. The hammer is a checkbox. We won the hammer. The question is, are we still going to have an economy at the end of the hammer? And that depends on the dance. The dance phase starts, and based on this prediction at this point, as we predict it forward, the US will go into the dance phase, which is the reopening of the economy, between May 10th and May 20th. So earliest that you can go into the dance without reinfecting the country is May 10th. I think that given we have a Republican administration, they'll probably push for that. The latest you want to go in is May 20th, because beyond May 20th, it doesn't really make sense to wait because you have very few cases. All right, so we're in a recession. We know that at this point in time. You've heard it. Green Street Advisors was actually the first group, and I give them lots of kudos for being different from everybody else, and then saying that the economic impact, the non-health impact, will be absolutely massive. Lots of geopolitical ripple effects, and the fact that this is a world recession, not a US recession. We've never had the world go into recession at the same time. It didn't even happen in 2008, because some countries like China and India were not in recession in 2008. At this point, every major country in the world has gone into a recession, at the same time, with China going into recession 2 months before everybody else. Now, so Goldman Sachs, I mean, lots of egg on this guy's face. You see Jan Hatzius, this guy has no credibility left because he issues a report at the beginning of March saying, oh, we're going to go down 5% in GDP in Q2, right? And then 15 days later, he issues an update, he issues an update saying, we're not going to go down 5% in Q2 GDP, we're going to go down 24%. And the largest decline in quarter by quarter GDP in history was in Q3 of 2008, which was the height of the 2008 madness, right? That's when people thought that the world was going to end and our economy was going to collapse. That was 8%. We're now predicting 24. Here's the really shocking news. Goldman revised the numbers day before yesterday, and now they're at 34% negative, right? And Morgan Stanley has moved this number up from 30 to 33. So all of these guys started off saying, oh no, this is a V-shaped thing. We're going to go down for 2 months and then back up. Everyone is now revising their estimates, right? And jobless estimates, we know we've already crossed this 9% mark as of this week. We're already at 10%. Now Morgan Stanley is talking about 15. Some, Goldman Sachs has revised this to talk about 20% unemployment in the United States. And that is because of this. So we've had 2 devastating weeks and a third one coming up. We had 3.3 million unemployment claims in 1 week and then 6.6, so a total of 10 million. And notice this is in comparison to the months before. We've never had more than 600,000 claims in a single week in all of known history, that as long as we've been tracking it. And so we basically first went 5x and then went 10x of that. So no other recession in history has been like this. Nothing like this has ever happened. Why? Because 18% of households in the US are already impacted by layoffs. This number is going to get revised up to about 26% next week. 18 million jobs have already been lost. Major industries have collapsed. This is Open Table, the reservation system for restaurants throughout the US. You notice no impact, really no impact on March 1st, completely down to 0 on March 19th, right? March 18th. Gone. So the restaurant industry went from being normal to dead in 18 days. And not just the restaurant industry, travel and tourism, retail, small businesses, mall operators, oil producers. My God, do we have an absolute meltdown going on in the oil market right now. Nothing like this has ever been experienced by oil. Nothing like this. So even the Federal Reserve of the United States is now talking about, oh my God, it's possible, and this is their highest number, so I'm being a little scandalous here. They're talking about unemployment in the US going to 30% in Q2 of this year, that the current quarter that we just came in. And they're talking about GDP going down as much as 50%. Now, he's backed off a little bit from this number, James Bullard. Now he's talking about it being closer to 30% because we're making good progress. Remember, the shutdown, the lockdown, it was much quicker than most people thought. And then the decline of the virus was much quicker than most people thought. And so on that phase, we are much ahead of where some of these predictions talked about. So we may not see numbers this high, but it is going to be catastrophic, right? When I started writing this presentation in March, I was very negative because I saw this scenario and this was about 20 days ago, by the way. I saw this scenario. We would do only containment. We wouldn't do lockdown. We wouldn't do national quarantine. And in this case, 40 to 70% of our population becomes infected. 2 to 8 million Americans die. We end up in a 10-year-long depression. But what we are seeing today is that we have a drop down. And at this point, the White House is talking about 100 to 240,000 deaths. I think that's highly exaggerated at this point. The IHME model talks about 80,000 deaths. So I think we're going to come in somewhere between 50,000 and 80,000 deaths at this point. Horrific number, but compare that to the flu taking 30,000 dead each year, and you get a sense of perspective that it's not the end of the world. Now, the economic impact of scenario 1 was nothing short of devastating. All real estate would have become illiquid. Dow Jones would have dropped to below 10,000 points. I think it's well over 25 at this point. And so what we are going to see now is a sharp recession in Q2 and Q3. So a lot of people are saying we're going to come back in Q3. That does not seem to be the case because demand is weakening worldwide. So it looks like we're going to have a 2-quarter recession before we start to see a partial bounce back. Now I want to use I'm going to use something to draw so that you understand that this is not going to be as good as a lot of people are saying it is. Let me see if I can click here. Laser pointer. Let me see. Okay, what can I get? Can I get something to draw? Okay, let me draw. So follow this laser pointer on the screen. People have been talking about a V recession, and now we're beginning to realize that's not the case. So here's what happens in a V recession. So you have the economy running okay, and then coronavirus happens and it falls off a cliff, but it goes down really sharp. And then we get to the point where the hammer stage ends and the world economy reopens, and then people were thinking it's going to just spike back up here. Nope, that's not going to happen. What we saw in China was, and if this was the base scenario, the bottom of this pink line is down sharp and then up 70% of the way, and then a very rocky up and down sort of process that goes on for 2 to 3 years. This is what most people believe in, because China, when it reopened, only went up about 70% of the way and then stopped, because people are still afraid of being in public. And also, China is a producer. It needs demand, and the rest of the world economy is shut down. Now, the US is a consumer, so we may do a bit better than China. So I think that we might go to 85 or even 80, 89 or 90% of where we were before coronavirus. But going from 90 to 100 is still a massive recession. So now people are beginning to believe that it's possible that even Q4 could be a recession. So we might have a 2-quarter or 3-quarter recession. Now, definitely, though, there's going to be a bounce back, and the bounce back is going to be because of all the insane amount of money that is coming into the marketplace. We've only seen 2 trillion so far. I'm projecting that Congress will put in another 2 trillion between now and the end of June. So you might see a doubling of the 2 trillion stimulus. But that's not going to change the fact that in the short term, I think we see price decline. So we're going to talk more about that. But first, Captain Congress to the rescue, right? So like Captain America, Congress swoops in, does a really good job for once, thank God. And in 16 days passes a $2 trillion stimulus bill, much faster and much bigger than they did in 2008. So I think Congress deserves some credit for doing that. So it is the largest emergency package in US history. They've been, direct payments to citizens. I have to say the apartment industry is a massive beneficiary. We were doing polls of our tenants in our Atlanta properties, and 30% of the people that paid us said, we paid you using the money that is coming in from the Treasury. And I don't think that we would have paid you if the money hadn't come in from the Treasury. So the real estate industry, the rental industry has been a massive beneficiary of this. We know today that when push comes to shove, tenants are going to first pay for food, then they're going to pay for Netflix, and then they're going to pay for the rent. And that's exactly what we've seen happen in April so far, which is why the industry is pretty happy compared to the nervousness that we had 10 days ago. So the lending programs are phenomenal. There's $500 billion for distressed companies. Notice that they chose not to bail out the cruise lines. So because the cruise lines are not, registered in the United States, they're registered in Panama. But there's a lot of bailout money coming in, and it looks like we're going to pass another $300 billion for this particular program. Small business loans are very beneficial. If you're a real estate investor and you have an LLC, why haven't you applied for this? They're giving you $10,000 in grants. Do you not believe that you're going to have any rental impact? Remember, you don't need to see a rental impact to apply for the grant. Go apply for the grant. It's very straightforward. If you don't know how to do it, have your CPA do it. Apply for it. And what's the worst case scenario? 3 months down the line, when it's time for that loan to turn into forgiveness, you've had no impact. Well, you just give the money back to them, right? But if you have impact between now and 3 months from now, that money turns into a grant. It's a gift from the government. There's no shame in taking it. Large companies are taking it too. Companies with 400 employees are taking it. You probably don't have 400 employees. Why would you hesitate? Talk to your CPA today and apply for that $10,000 grant immediately. If this is the number one action that you do from the webinar, do it now, especially if you created an LLC for your rentals. So student loans are deferred, which is really, really nice, and we might actually see some forgiveness there as well. And once again, we notice that the government helps real estate as a protected class. Mortgages, we have 60-day forbearance. How does this help us? It doesn't crash the single family market. Multifamily, we've got 90 days of forbearance, and lenders even telling us, look, don't default on us. After 90 days, if you can pay half of your mortgage, talk to us. We'll work with you, right? All of this stuff was government driven. No other industry received this benefit, right? There was no mortgage forbearance for retail. There was no mortgage forbearance at a federal level for hotels. Everyone there has to pay their mortgage. But multifamily and single family, boom, immediately more, there was protection. Now there is eviction protection, which hurts us. But with 80% of our tenants already paying rents, it doesn't matter. Normally we get rents from about 95% of the people, because the 5% of the people don't pay in a normal month. So we've got this 15% gap. And that 15% was the money that we were distributing to our investors. So the moment we stopped distributing, and keep in mind that that money is not lost. People will pay it back to us at some point. We're just readjusting a lot of their leases so that they pay their money in future months if they weren't able to pay today. We're also allowing them to use deposits. We're allowing them to pay in 2 or 3 sections. And you should be doing all of these. For those of you that have rental properties, don't forgive rent. Make adjustments, use deposits, spread it out over a longer time, but do not forgive rent, because you do that, that news spreads, it hurts the entire industry. And most importantly, it's going to hurt you if you have more than one tenant. Unemployment insurance is a big deal, and we're also seeing states pitch in. New York announced today that it would add $500 per paycheck to unemployment on top of what the feds are already doing. And then most importantly, our hospital system has been crushed because all elective procedures were gone. All of those nose surgeries and boob surgeries cannot take place anymore. The elective is where the money was for the hospital. They can't do those. And so the hospital system would have come to a grinding halt in 30 days if they hadn't bailed them out with all of this money. So I have to say this, and a lot of people have said this publicly, and I'm not a huge fan of big government, by the way. I don't like bailouts. They did a good job here. They did a very, very good job. It's fairly comprehensive. They missed on a few things. I'm sure they'll come back and fix that in phase 2. So, how does this impact us? Well, realtors and brokerages, right? We extended unemployment benefits to independent contractors, to gig economy workers, something that we've never done. And obviously there's a big, potential for fraud. We're also eligible for small business or distressed company loans. I've already talked about that. So that's a big deal for real estate. It's a huge, huge advantage, right? So we definitely saw a huge easing in tenant strain because of the money that was showered by the feds, or is being showered at this point in time. And those forbearances showed, once again, real estate is a privileged asset class, because and I know for a fact that they did not do that for any other asset class. Student housing was really helped. Students wouldn't have had money. Their loans are delayed for 6 months. Do you know that 85% of the students that are being allowed to stay are staying in their dorms? So the industry is not refunding their money. They're just saying, there's no change. You stay in your dorms. So what students are doing is, instead of going back home and living with parents, they're still living in the dorms and taking online classes at the university. So that was a surprising trend. Very good news for those of you that are student housing landlords, that market is not as badly hit as most people thought it would be. Here are the problems, right? So devastating for retail. At this point, we see massive numbers of foreclosures coming in Q3 and Q4. You're never going to see as much inventory as you're going to see in Q3 and Q4 this year in retail. If you like strip malls, you'll have a choice. If you like big malls, you'll have a choice. There's going to be a huge amount of retail meltdown, because what we've heard of is, unlike multifamily, where 80% of the tenants paid in April, we've heard that in retail, for lots and lots of the smaller strip malls, 20% of the tenants paid for April. So even with deferment, even with small business loans, I think that right around August, some of the weaker retail outlets, which were not eligible, not everybody's eligible. If you were already very weak, you may not be eligible for some of these mortgage extensions that people have been getting. So I think you see a huge intake here. Office is an X factor. Everyone's getting used to Zoom and GoToWebinar. Will all of those people come back? Will employers choose to extend their leases? Will they choose to take on new land? We don't know, but we do know that some of this office is going to get converted into medical office, because our needs for medical office are going to go up in a post-corona world. It is going to be a big deal. Now, keep in mind, not all offices can be converted to medical offices. So this is something that is an X factor. We have to basically figure out easy ways of converting regular office into medical office. Industrial, huge uptake, massive uptake. Hospitality, big downside. And I'll talk a little bit more about this, right? So home sellers and buyers, so far the single family market has done well. Why? Because they are the biggest beneficiaries of the interest rate cuts. They're the biggest beneficiaries of the mortgage forbearance program. Landlords are getting free money. They're getting grants. They're getting loans. So far, what we've seen in the single family market is the market's sort of frozen. Less and less people are going to these open houses, but the market isn't falling yet. It's falling in places like the San Francisco Bay Area where homes are very expensive, but in other parts of the US, the market isn't falling. I would even go so far as saying that I don't see a huge number of defaults coming in Q3 in the single family marketplace because there was already low inventory. You might see a slight decline. You might see a 5% decline. I think 5-7% declines are normal in a recession, and they may be fairly short. You might only see them in Q3 and Q4, and then you might see prices go back up next year when we find a vaccine. So there's some opportunity here, but I think there's bigger opportunity in the retail and office space, and also in hospitality. Self-storage, just unchanged. I mean, multifamily is a roof over your head. Self-storage is a roof over your stuff. And so no one in the middle of this madness is thinking, I'm going to go rent a truck from U-Haul, drive to my self-storage facility, take all that stuff out, get myself infected, come back and save $70 a month. So we haven't seen any impact on the self-storage market at all. So other beneficiaries, real estate investment trusts are doing well. They're outperforming the market. Possibly there's going to be some benefit to home builders. It's too soon to tell, so I'm not sure about this particular one yet. So, as I mentioned, people weren't sure whether rents would do well, but at this point, I have real data that shows that rents have done well, despite the fact that we were not allowed to postpone property taxes. Rents have still done well. Now, there's one X factor, and I want to give it to you. Obviously, I gave you the good side. I want to give you the bad side too. There is a accelerating movement for a nationwide rent strike, right? So this shows 4,600 hearts. You can go check it out on Twitter. It's a lot more. So there's tenants who are basically saying, we want to go on a rent strike. If you want to read about it, Google City of San Jose rent forgiveness. So as you can imagine, liberal states are doing this, red states are not, which is why I am a liberal Democrat who only invests in Republican states. So if you look at all my properties, they're all in Republican states, because we don't think about things like rent strikes or rent control sort of things, and that protects us as real estate investors. But watch out for this. It could be nothing. It could be a big deal. It's really hard to tell. I'm going to skip past some of these slides because we've talked about them already. So the key thing is, when we do the dance, which starts sometime in May, we want to make sure that we terminate the virus, we kill it, because then you have a better probability of not having a second or third wave. Because if we get a second or third wave of nationwide closure and we have to shut the economy down again, I can tell you this, we're going to go into a depression. So it's better off that we took the one-time hit and we're moving forwards. So how have we benefited? And we've had to pivot as well, since this is one of our apartment complexes that we're building, and it's in Mesa. And once again, what we're seeing is that real estate, especially multifamily, is a privileged asset class. And we're seeing a resurgence in interest for need-based assets, right? Hotels, as it turns out, are want-based assets. Retail, as it turns out, is a want-based asset. And it turns out that, renting single-family homes, which you can do on your own, or renting them as multifamily assets is something that's huge. We already had a lot of wellness features at this community, and we're actually adding to a lot of wellness features at this point because that's become a big deal going forward. So this is a property in Mesa, Arizona. We're also doing self-storage projects because in today's environment, it makes all the sense in the world to look at self-storage. I mean, firstly, in a recession, people lose homes. So it's going to happen in this recession as well. Well, guess where their stuff goes? It ends up going into self-storage, and it ends up being there for 2 years and 3 years and 5 years, because even as the economy comes back, people don't go straight back to 3-bedroom homes. They start at 1 bedroom and they move up over the 2 or 3 years. So this is a very resilient asset class. It was the best in 2008, and so far, based on what we've seen, it might be the best in 2020 as well. And keep in mind, we're multifamily guys, but we know this is a better asset class than ours. So, the facts are the facts. So some of this content I've already covered. There is a question that comes up in every webinar that I do. People say, Neal, we just cut interest rates down. Isn't that going to push up the real estate market? And I want to point out, yes, it does, but it doesn't do it in the short term, because as people get laid off, nobody gives a damn about going out and buying a home. Everyone's fearful. Even the people that have not been laid off are fearful, so they don't go out and buy homes. The market first has to stabilize for the low interest rates to push it up. So what the low interest rates do is they don't stabilize the market, but they move the market back up. They establish a floor under the market once we have some sort of recovery. So these super low interest rates, are they going to help the single family market in Q2? No. Q3? No. Q4? Maybe. We'll see how quickly the market bounces back. So, and you can see people like PricewaterhouseCoopers, agreeing with me. Low rates, tight inventory will not be enough to shelter the housing industry. I'm going to skip past some of the multifam guys and go to a slide that I like better. So I'm going to go to a slide that kind of covers all of the real estate industry in a very powerful way. Now, I do want to cover this one. This is the California Association of Realtors, and they're talking about impacts in the marketplace, right? So they did go back and look at what SARS did, the SARS outbreak. They looked at MERS did, right? And the impact was not as strong, but here we had a strong impact on consumer spending because of shutdowns. So they are pointing out that new home construction could slow further. We're already seeing that. We're talking with people and they're saying, if we had a mega project with 6,000 homes, we're cutting it down to 2,000 homes because we're not getting commercial loans, because the single family loan market seems to be doing well. The commercial loan market for jumbo projects, not doing well at all. Seems to be more or less frozen at this point. So I'm going to skip past this. This number has actually gone up because at this point, less and less, open houses are being held. Some of them are virtual open houses, but we are seeing massive declines in volume for single family. And we think that that's going to continue, right? I mean, think about it. You're a seller. You're going to be reluctant to list homes because you're afraid of falling prices. You don't want strangers in your homes. If you're a buyer, you've seen a decline in interest, right? Because of the stock market correction, it's making you feel less rich. Also, you're waiting for better prices, and you're just nervous about the opportunity, and most of all, you're afraid to physically go to these open homes. So you've seen a significant decline in activity. So here's kind of my hero slide because it summarizes the impact to real estate. I've told you some of this, but I want to tell you the whole story. Here are the biggest losers in real estate. The biggest losers, and oddly enough, nobody thinks of this, the biggest loser is senior housing, skilled nursing. Do you want to leave your 85-year-old grandma in a skilled nursing home right now with this enemy circulating the corridors? Will you do that until a vaccine comes out? The answer is most people are simply going to move grandpa and grandma to their home because they're afraid. And so we've seen senior housing facilities throughout the US empty out. And I think that until a vaccine is developed, senior housing, skilled nursing, independent living, these are all going to get hit big time. And you've seen that with their public REITs, their stocks getting hit like crazy. Hotels have gotten hit. I do think hotels bounce back as soon as the economy reopens, which is why you notice that their stock is not down as much as senior housing. So 30 days after you reopen the economy, lots of hotels will have good occupancy. Student housing should not even deserve to get hit this much because the students didn't choose to go home. The students chose to stay and do online from their dorms, which was unexpected. So the industry is celebrating that. Still, there's a significant impact here. Then in the second group, the hard hit group, not the biggest losers group, you see the malls, you see the strip centers, and that's where a huge amount of the failures are going to come. You're going to see a huge amount of distress inventory. You're going to see the court staff stuff. You're going to see all of that stuff that we haven't seen for 7 or 8 years. Maybe not so much for office. Why? Because the tenants for offices are well capitalized. They don't have $400 in the bank. They have $400,000 in the bank. So for the most part, they paid their rent for the month of April, and they're probably going to pay May, June, July. So if it drags on, I think office gets hit. If it doesn't get dragged on, then we have this X factor. Will people come back to the offices, or will they stick with Zoom and go to webinar? That's a big X factor. Nobody really knows. We think that there's going to be some impact, but it's hard to tell how much. But in the short term, the offices are getting their test. Now the apartments got hit initially, and then these numbers, this -23 went this way. So I haven't updated this slide yet because people realize, oh, the apartment industry is actually getting bailed out by the government, right? Because of all the rent money that's coming in and all the mortgage forbearance. So people realize that you know, this doesn't deserve to get hit. So these numbers have gone down spectacularly. But I think the real winners, if you want real winners, they are the medical offices. After 9/11, for the next 10 years, the biggest gainer of that catastrophic event was the security industry. After 2020, the biggest gainer for the 10 years is healthcare. We don't have enough medical office space. We don't have enough immunology clinics. We're going to have to redo healthcare in this country in a post-coronavirus world. So I think medical office REITs are a great buy. So if you know how to buy a real estate investment shares, you might want to look into them. And then, of course, as I said, self-storage was an absolute rock in 2008. And so far, as you can see from you know, what the market's thinking, is an absolute rock in 2020. And I'm going to finish off with an area that I don't have much competency is, but there's definitely something going on here. Here's the stocks that are getting hit. But I think that given that the hammer is now successful, and I know CNN's not talking about the hammer being successful, but trust me, 10 days from now, CNN's going to be talking good news, right? It just, CNN looks at the deaths because that's what sells advertising, and CNN's having a blowout quarter. By the way, one of the stocks that you should look to buy is CNN because they're having a blowout quarter. But some of these will come back quickly. Starbucks is down, Walt Disney is down, right? So some of these staples will come back really, really quickly. And if you ask me what I'm buying this one. I bought Royal Caribbean stock and I bought it at 24. It's now at 32 or 33 because I believe that the cruise industry is very, very capable of figuring out a way around this. They will do testing for people on ships. They will prevent people from, you know, above 75 from getting on for the next 6 months. They'll do whatever it needs to survive. And Royal Caribbean is a phenomenal company. So is Carnival. So if you are not risk averse, obviously this is high risk stuff. But if you're not risk averse, take a look at them. Here's another company that you might want to look at whose stock has been completely beaten down. Boeing. Boeing is the best airline manufacturer in the world. And yes, I know what happened with the MAX, but the MAX is now going to get recertified. And we beat the crap out of the Airbus 380, didn't we? So it's a phenomenal company. It doesn't deserve to be where it is. Once again, I'm not a stock advisor, but I want to make sure you don't freeze today. This is going to be a short recession. There's going to be a lot of opportunity, but the opportunity is quick. Already you've seen the stock market fall and then go up again, right? So this is a short one. So make sure that your investing juices are not frozen. So these are some of the stocks that are doing poorly but have potential, right? I wouldn't buy, by the way, mall stocks, right? So these are just doing poorly. If you like shorting stocks, mall stocks might be really good stocks to short, right? On the other hand, these are stocks that might benefit, and some of these are short-term benefits, some of them are long-term benefits. Some of you may be ethically opposed to buying gun stocks, but do you know what kind of a blowout quarter they're having? There's lines outside gun stores in the US. They've been deemed essential. So as long as you're okay as an investor, look at gun stocks. Phenomenal, right? I don't own guns, but I don't mind buying gun stocks. So, and then there's some people that are long-term beneficiaries and short-term beneficiaries. Electronic Arts has seen a phenomenal increase in load on their servers. Some of their servers have crashed. So in the short term, I think that EA and Zynga and Activision are going to have phenomenal Q2s. Again, there's so much opportunity in a bad time. But if you want long-term benefits, here's what I want to point out. You see this company here, Grubhub. You see DoorDash? Millions and millions of Americans like me signed up for the first time for delivery services. And then we realized, oh my God, over 20 or 30 bucks, delivery is free, right? I just have to pay $3 or $4 to the guy that shows up at the door. This is so convenient. I mean, I was spending more in gas. And so people are actually, attitudes are changing towards delivery. They're also changing towards places like Instacart. So those are long-term beneficiaries. The post-corona world is a world we don't live in for the next 6 months. It's a world we live in for the next 10 years. And so there's changes here. As an investor, especially as an IRA investor who looks at the long term, you've got some phenomenal stuff on this page at this point in time, and everything is on sale, right? If you think the market's gone up a little bit, well, wait a while, it'll go down again. We are not at the bottom of this market yet. But 2 or 3 years from now, a ton of the stocks on this page should be doing way better than they're doing today. So that is my presentation. If you have questions about asset management, I'm going to leave this slide up here so you know the offensive and defensive tactics that we are taking. If you guys do want to discuss this, please bring it up in questions, and I will certainly take it on. I want to point out that my company has had to reinvent itself. We're doing different sorts of projects than we were in the pre-coronavirus world. What we're doing, and by the way, my phone number is here for those that want to know about my self-storage projects, my multifamily projects. We're possibly going to be doing projects in the cell tower arena because that area is done really well. So if you're interested in learning more about those kinds of projects, please do send me an email. Here's my email address. And if you want to learn more about these sorts of webinars, I do 40 of these webinars a year. Some of them are done by my data-driven friends at multifamilyu.com. So multifamilyu.com, sign up there and you'll see a huge number of them. We're doing one about tax laws. Next week, we're doing one about how to use the free money that the government's giving you. What are the steps to applying for the $10,000 in grants and the $1 million in loans? All of those steps are being provided in separate webinars. So we're doing a series of webinars on multifamilyu.com. If you're interested in investing, here's my email address. I'm happy to take your questions.
All right, Neal, thanks. Can you move ahead to the next slide and then
Sure.
So if you are still interested in investing in non-traditional assets, and the non-traditional asset is anything other than stocks, bonds, or mutual funds. So if you're looking to take advantage of the opportunity to get into real estate or anything else, and you want to do it inside a retirement account, Entrust obviously can help with that process. You just have to open an account with us, which takes about 10 minutes to do it online. You fund your account, so you'd have to transfer or roll over money from your current custodian to your Entrust account. And then you instruct us to purchase your investment using your retirement account. So that asset is held in the name of your retirement account. Go ahead, next one, Neal. Okay, Q&A.
Yeah. Yeah. So Bill, before we do Q&A, I want to say something to the audience. So keep in mind, guys, Bill is a fiduciary. He will never recommend any service or anyone because he can't do that. I don't have that requirement. I'm not a self-directed IRA account. I work with, my company has 500 investors, about 100 of them are IRA investors, and we work with a dozen different companies. I do recommend Entrust all the time. And first reason for that is they've been in the market longer than everybody else. They've got the systems and the technology. And so when you're working with people like us, there's always a rush to get in because our projects close very quickly. So what we recommend is that you work with IRA providers that are technologically savvy and can process things much faster. Entrust is very scaled, so you do get a lot of value for your money. I mean, it costs the same, but you get a lot more value for money because they've had the systems in place. So that's my feedback on Entrust.
Oh, thanks, Neal. Okay, so Neal, again, if you just put to the next screen, it'll have both our contact information up there. We're just going to leave this up here, and so questions have started to come in. Again, feel free to type them into the questions box, and I'm going to read them. And I've been looking through a few of them. Some of them are for me, some of them are for Neal. And so I'm going to read them, and then whoever is appropriate to answer it will answer it. And sometimes it might actually be both of us. So first question, which is for me, says, I made a loan as a PML to a group of investors in the San Francisco Bay Area last year out of my self-directed IRA. The collateral was sold at too low a price to pay PMLs. The borrowers defaulted on the promissory note and will not communicate. What steps should I take to cover red tape with this self-directed IRA, and are there any taxes and penalties? So Don, we're going to need, we have a form called a fair market valuation form that you'll need to complete. I'm assuming this is with Entrust, but if it's with a different custodian, you'll have to talk to them as far as what they need. But for us, we would need you to complete our form, and then we would either need a signature by a third party on that form, like a CPA or a lawyer, or some supporting documentation to show that the asset has no value. If it is with Entrust and you have more questions, why don't you go ahead and email or call me, and we can talk about it offline. Next one says it's from says no question, just a comment, thanks. And I'm gonna this is for you, Neal. If you want to, if you have any thoughts about this, feel free to respond. It says Japan just went into national lockdown. What national lockdown? Not as good as first thought.
Yeah, my straightforward answer is lockdowns are not avoidable, but the Japanese saved tens of thousands of lives. This is a country with a very dense population. It's a very small landmass. Tokyo itself has more than 20 million people. They could have been New York, but the steps that they took saved a massive amount of lives. In the end, everyone has to go to lockdown. Theirs will be much shorter than ours. They'll have a lot less economic damage than ours. They definitely did a good job, no doubt in my mind. Let's see. Students
Next
are not
one.
allowed back in dorms, by the way. So that comment, Nicola, came from Nicholas. Nicholas, that is a university by university thing. There's plenty of universities that have no issues with students being in dorms. I know this for a fact because I just went to a student housing webinar, and there's more universities allowing students to stay in the dorms than forcing them to leave.
Yeah, and I'm going to keep, some of these are just comments, but I am going to read them, even though they're not questions, and allow
Sure.
Neal to respond if he sees fit. Next one says you should be using percentages based on total population, not just the growing numbers. This is misleading. So there's a little bit of feedback. I don't know if you have a response to that.
And actually gave us incorrect results. Bottom line is what we found out was the daily growth rate for a large nation and the daily growth rate for a small nation is very highly correlated. So we were able to use that data without looking at the size, right? Keep in mind, we're not looking at how many cases a big country or a small country has. We're just looking at the daily growth rate of that country. So because we were comparing that country's growth rate to its growth rate the previous day, we were getting around the issue of big country, small country, more testing, less testing. And so we were able to get very consistent data. And so far, you know, our projections, which are listed on coronavirusrealestate.com, there's an Excel spreadsheet. You can go back and look at what we were projecting. We're doing pretty well. But obviously now there's an engine called IHME. So we're looking at their numbers. But early on, there was no data available to the public. And so we were projecting this ourselves. I do want to point out that anyone that wants a copy of this webinar or wants all of our other 3 or 4 coronavirus webinars can email me. My email address is on the screen. I'm happy to send a full copy of the presentation to you. There's more slides. I wasn't able to go through all of the slides. So when I send that out to you, it'll have all the slides.
Yeah, and we make this, we record this, and it goes on our website, it goes on our YouTube page, and anybody who registered for the webinar will get an email with a link to the webinar, so they'll be able to watch the webinar again. Which brings me to the next comment.
I want to take Dennis's question because it's very pertinent. So he says, any idea of the Oklahoma rental market, single family homes? I have bad news, Dennis. The Oklahoma economy is very exposed to the oil meltdown, and boy, oil is not getting enough views on the web and on TV. It's simply because the mainstream media doesn't like oil. You know, it's a polluting sort of thing, but it's one of the backbones of our economy. At this point, oil has temporarily gone up to $30 a barrel, but it's going to decline again. Oklahoma has a significant impact, so you are going to see a massive impact there. So Oklahoma, North Texas are going to see a significant impact from the oil bust. And keep in mind, oil demand is not coming back up. The Chinese economy opened up. They're only burning 85% of the oil that they were burning. If that happens for the rest of the world, you're going to see an oil debacle over the next 12 months. Not a short-term debacle, but a long-term one.
Okay, Neal jumped ahead a little bit there. Next one is just a comment again, but I'm going to read it. It says, very good, please send it to Trump from a molecular virologist. So we do have a link for this, so maybe we can send it to the at US.gov or something like that. All right, here's a question for Neal. The money coming into the market is to help with what is already owed. Why would that be helpful into the future?
Because it helps stabilize the marketplace. If people that owe money have no income coming in, they're going to default. That destabilizes the market. The price of everything goes down. And because the credit markets are frozen for the multifamily and commercial side, they're not frozen for single family, by the way. Single family is fluid. People are making loans. Multifamily and commercial for the moment is frozen. So if you have a market where there's defaults coming in and nobody can actually buy because the credit markets are frozen, you end up in a absolute landslide. So what the Federal Reserve did by buying mortgage-backed securities and what Congress did by plugging money into the part of the economy that is the most important, really, shelter and food, is incredibly critical.
Okay. Here's another one for you, Neal. Recommendation for those of us that Airbnb our homes. Can we apply for the 10K?
Yes, you can, because you lost income. And what we've seen so far is they're denying some and accepting others. So it seems like it depends on how overloaded they are. In certain cases, they're denying them, but I would absolutely apply. It is free money. There's no guilt in it.
Okay. Here's another one's a comment. Says students are not allowed back in the dorms. By the way, my girlfriend is a professor at Indiana University. Maybe that's university specific.
Yeah, it's university specific. More universities are still allowing them. It's just they're not allowing them back inside the colleges, and they've locked them up.
Yeah. Are there any real estate trusts that own funeral or cremation facilities? I see them as a potential to make money, sadly, I might add.
Yes, but keep in mind that this is a short-term search. So, any bodies that exist will all be done by July. So, I would much rather urge you to invest your money. You're an IRA investor. You're looking to invest for long-term. Invest in things that have long-term upward momentum, right? So we've seen that multifamily has done so much better than some of the others. So, not necessarily my multifamily, but you can buy quadplexes yourself every day. Look for long-term benefits. This is a very short-term benefit. I mean, it's much better to, and I don't know if there's any REIT stocks, but there's definitely funeral homes that might be listed on the stock market, but you probably then want to trade quickly and trade out within the next 2 months.
Okay, and there were a handful of people right in a row that asked if we could make the presentation available. And as Neal said, if you want just his presentation, he can make it available to you. And if you want the webinar itself, we do, again, I'm going to repeat, we email out the link to everybody who registered for the webinar. So for those of you who said, I missed the beginning, et cetera, we'll send you you'll get an email with the link. Next question, is it safe to assume that an LLC owned by our IRA is not eligible for federal funds aimed at protecting us against rental losses?
That's an interesting question. I don't know the answer to that, but Karen, I would ask your CPA. I'm sure there's a million people asking that question. My gut feel is you should apply anyway.
Yeah, I don't know the answer to that either, unfortunately. Karen, when you find out, let me know. Next question was for me. Wow, it disappeared from my screen. It said, when can I buy ETFs using my Entrust account? We now have the ability for you to do that. We've set up a platform through Interactive Brokers. It disappeared from my, oh, there it is, Dawn. So if you want to find out how to do that, just send me an email and I'll send you, there's a form that we need you to sign, and then we'll turn on the trading platform within your account for you to be able to do that. Next one's a comment. Excellent presentation, Neal. We're probably going to get a lot of that after this. How do I get rental property in an LLC? I was told yesterday by a bank that they don't allow it, but can do it. All right, well, Brian, if you want to have your IRA do it, I mean, you can just simply establish an LLC, name your IRA as the member of the LLC, and then you use that LLC to go buy rental property. If you're talking about a bank that won't lend to your LLC, if that's, I'm not sure if that's the question that you're asking.
Yeah,
how do you get rental property?
Find another bank. I mean,
find another bank. If it's an existing property that you own personally and you want to move it into an LLC, you just have to re-register it into the LLC. You have to establish an LLC, and then you have to go change title on the owner of that property from your IRA to the from your personal ownership to the LLC. Same thing if you want to do it in an IRA. If your IRA owns a property and you want to move it into an LLC, you establish an LLC, name your IRA as the member, and then just re-register that property into it.
That's what I do. I buy the properties first, apply for my loan, get my loan, and then I go back and move that property into an LLC. Banks are much more flexible when you're doing that move than when you're applying initially.
Okay, do you know if you can apply for small business association loans for each LLC, and do you get forgivable 10K grant per LLC?
So The honest answer is nobody quite knows, but everyone is assuming 10K per LLC. That's what I'm assuming. I've applied for 4 different LLCs.
Okay.
Keep in mind they do have your social security number, your EIN number, and it goes onto every form. If they think that you're applying for too many, there must be an internal system to catch. But why not? Not doing anything wrong.
Okay, next question. We wholesale single-family homes in 2 to 4 units. We are planning to direct our cold callers and marketing toward direct-to-seller on multifamily 20 to 60 units. Would that be worth our time during this time?
I don't think so. The multifamily market is moving slower. So right now, the market that is more liquid is single-family 2 to 4 units. I mean, and by the way, there's going to be a positive impact to our rents because we're seeing multifamily new construction almost entirely stop, which is great, right? For those of us that already are sitting on 2,000 units. So, you know, because there's no incoming supply. So bottom line is you're going to find it really, really difficult to do what you're doing because of the lack of liquidity in that marketplace and the lack of buyers. So I would not advise you to do that. Right now is a good time to be in that single family market. It seems like you already know it.
Okay, next question, Neal. If previous assumption of multi-decline was 34% from the slide, what do you think the range is today? Any advice for Southern Cal investors in multifam to manage potential rent strikes and or delinquency? Two-part question.
Yeah, so the first thing is it was 23%, not 34%. It's down to about, you know, -12, -13. So obviously multifamily REITs are massively outperforming the S&P 500 and Dow, and they did that in 2008, 2001 as well. So it's not new news, but it's nice to see that our asset class does better in bad times. The answer is that advice to SoCal investors, I think you're in deep doo-doo. I think that rent strikes are most likely in Oregon, Washington State, and in California. And the only advice I have for you is advocacy. I mean, you've got to make sure that your local apartment association is talking to your local councilman and saying, do not support rent strikes. I mean, it would be devastating to your business if there was a rent strike, because these things are like coronavirus. If they spread, they're going to spread across California, and it will be far more devastating than the coronavirus ever could be. So advocacy is your only choice. There isn't a lot that you can do.
Okay, next question again for you, Neal. Do you think the economy will go through a deleveraging process? If so, how do you think it'll affect the housing market? Thanks.
No, we're doing the exact reverse. We are leveraging up. We're not deleveraging at this point. We're leveraging up as a nation and as a world. So our Fed has just printed $2 trillion, or our Congress has. The Fed has printed another $2 or $3 trillion of liquidity. Every other bank in the world is doing it. Every other Congress in the world is doing it. So we're actually at a national level leveraging up right now. The world ends up with a lot more debt 6 months from now than it had in February. So how does it affect the housing market? Well, there's pros and cons. Number one, there's a finite number of amount of land and a finite amount of housing market. So in a world where we are adding debt faster in a year than we've added in decades, obviously hard assets people are going to move to hard assets over the next 5 years. So short term, I don't know. Long term, it'll have a positive impact. But on the downside, the housing market depends on household creation. And for the next 6 months, you will have negative household creation in the US. All recessions in the US have had negative household creation, which means demand falls, right? Supply remains the same. So at this point, over the next 6 months, it's going to affect the housing market in that your rents are likely to either stabilize, or you may not be able to increase them. They may fall. You might see some more delinquency in the short run. But I think it's worth holding for the long run, because the world is just now printing money it doesn't have. I mean, there's just fiscal conservatism has gone out the window. The Republicans don't do it. The Democrats don't do it. Other countries don't do it. In the end, there's obviously a downside to that. And holding hard assets like gold or real estate is more important today than before.
Yeah, and we are definitely, I'm going to add on to that, we are definitely seeing a spike with people who are putting money into precious metals with us. I mean, we're seeing more accounts getting opened, and I mean, that's a consistent thing that happens with us anytime the market drops. Okay, next one, again, is a statement. Only know what we measure. Heaven knows we aren't effectively testing yet in the U.S. Appreciate the presentation, thanks. So, I mean, but yeah, well, I think we're
Yeah,
all kind of aware that testing is an issue.
yeah, but it's becoming less of an issue. So bottom line is testing was needed at the beginning, the way South Korea and Singapore did it. It's not as important today, but it becomes critically important in the dance phase. I mean, whether we get through the dance phase without a second shutdown is totally dependent on testing. So testing in May matters a lot more than testing today, because today we're catching this thing and we're killing it simply because of social distancing, right? Whether we test or not, the virus is dying simply because people are not interacting.
Okay, next question. Are you aware of California legislative PACs or organizations to fight the tenant groups and anti-landlord no eviction policies?
Oh yes, I mean, both the California, business bureaus and the business councils, as well as the California Apartment Association, has a presence in Sacramento, and now is a good time to talk with them because California is in trouble at this point in time. It is clear that cities are actively putting on the agenda a rent strike or rent forgiveness program. San Jose is this week, so we'll see how that goes. But San Jose is a critical market. It's a very big market in California. So I'm quite afraid of what happens here for people that invest here. I mean, I invest in deep red states, so I know I'm protected. But still, for California to start to forgive rent is going to be damaging to the real estate market as a whole.
Okay, next one's right up your alley, Neal. What will be the impact on this on Jacksonville, Orlando single family markets?
So, Jacksonville and Orlando have very significant population growth, especially Orlando. So I feel that the impact will be contained. But on the Orlando side, they're doing a lot of new construction, not so much Jacksonville, but Orlando's doing a lot of new construction. So temporarily, you're going to see a lot of distress there. So Jacksonville, you'll see a little bit of, lower price inventory come to market, most likely Q3, Q4. That's what I'm predicting. Orlando, it might take a little bit longer because there's so much new construction going on in Orlando.
Okay, how many 10K can I apply for if I have 10 properties?
Well, they're in one LLC, you can apply for one. If they're in 10 LLCs and you are losing rent, you can apply for 10. Keep in mind, it's a loan. 3 months from now, if you want to convert that into a grant, you have to actually show them proof that you were hurt.
Is there any extension for 1031 exchange transactions?
We ask that question every day. The answer every day so far has been no.
Okay, next one's for me. For IRA accounts, real estate property tax can be paid outside of IRA fund. That was asked as a question. The answer to that is no, Dennis. Your IRA owns the property. Your IRA is responsible for paying all expenses, including the property tax associated with that property. If you don't have the money in your retirement account to pay that property tax, then you need to get money in that retirement account to pay the property tax. An IRA can borrow money. There are financial institutions that will lend money to your retirement account. So, but no, you can't pay it personally. It has to be paid by the account. If you're going to have someone else pay it, then have that other person loan the money to your retirement account and have the retirement account pay that property tax, but it's got to be paid by your account. All right, next question. If I am in the middle of escrow and acquiring a rental home under an LLC, am I eligible to apply for the government aid?
Unlikely, because it seems that government aid is based on comparing previous year to this year. So how would you prove distrust?
Okay, are there specific types of medical offices or states where you would focus investments?
Houston. So Texas Medical Center is the largest medical center in the world. I would look for medical offices around TMC because TMC is going to just explode in size. Texas Medical Center is the size of Manhattan. I mean, it's just massive in size. And because they're a research facility, all kinds of interesting stuff is going to happen there. So I'd go look at TMC.
It is the size of Manhattan?
It's massive in size. I mean, it's enormous in size.
Okay.
So,
how do you see all this money affecting the value of our dollar? And then he added a little caveat, all this printing of money.
So, what we learned, interestingly enough, this is macroeconomics, but macroeconomics, I read a lot about it. Things have changed. So before 2008, traditional wisdom was, if you print a lot of money, you will have a lot of inflation, and that inflation will drive down the value of your dollar. Well, what we found was that if everyone prints at the same time, it actually doesn't impact the reserve currency of the world. Also, we found that if there is underlying economic weakness, printing money doesn't create inflation, right? So all these people that in 2008 and 9 and 10 and 11 and 12 were saying, hey, don't print money, it's going to cause inflation. Well, nobody listened to them. We printed trillions of dollars. We also did quantitative easing, and no evidence of inflation was found in the last 10 years. In fact, inflation was under the Fed's target pretty much all of that time. So what we found was in weak economic conditions, you don't typically create inflation by printing money. I betcha the next 2 or 3 years are going to be weak. In the long run, obviously, everybody knows that printing money will cause hyperinflation. When? God knows. My crystal ball is broken.
Okay, next one. I'm started doing turnkey properties. I'm looking into more investment properties now. However, is there a way to do these investments in the name of the LLC rather than my own name? Or do I need to do the loan in my name and then do a quitclaim to put in the LLC name? I mean, I can answer that. You can do it in the LLC's name, but again, come back to, and we'd answered this earlier, if the LLC is borrowing the money, then you have to find a bank who's willing to loan money to your LLC. I mean, certainly putting it in your own name and then quitclaiming it into your LLC is an option, but I certainly don't think it's required. Same thing with your IRA, and I'm going to come back because obviously I work for an IRA custodian. If you want to use your IRA, you can do it either way. Your IRA can buy a property directly, and then you can establish the LLC, naming your IRA as the member, and quitclaim it into that LLC, or you can just set up the LLC and have the LLC buy the property directly. The concept remains the same.
I'm partial to the first one that you mentioned, Bill. Buy the property, move it into that LLC, and make the LLC a member of your IRA.
If I'm in the middle of escrow, I think this was asked.
That
If I'm
would
in the
be
middle of
answered.
escrow acquiring a rental home under am I eligible to apply, right? So the answer to that is probably not. Okay, looks like we're to the last question. Just giving people a heads up if they have any more questions to ask. Get it in there now or else we're going to be done. This doesn't even look like a question. Can you ask your government to spend the money on REIs rather than the idiotic covering illegals' health insurance?
Keep in mind
okay,
that
well, that's an opinion.
That have received money were not illegals because of the way that taxes are filed. So everyone that has received money at this point in time is unlikely to be an illegal. So I think, to me, if 1/10 of 1% of that money is going to illegals and 99.9% is going to Americans that don't have money to buy food, I'd let it go.
Yeah, I'm going to add on that people can't be illegal, by the way. An individual can't be illegal. They can be not allowed to. They could have entered this country illegally, but that doesn't make them as a person illegal. So I'm offended by that term. I'm just going to throw that out. Okay, can I buy stocks through my Entrust IRA? Yes, you can. Karen, you'll need to sign a document that we have, and then we'll turn on the trading platform for you. So if you want to email me, then I'll forward you that document. NASB.com, best bank for real estate loans in IRA or LLC. Howard, I can't answer that question whether they're the best or not. We have a list of non-recourse lenders on our website. North American Savings Banks is certainly one of them that's listed on there. Best for you might not be best for somebody else, so best is a relative term. Neal, what areas do you think do better in real estate investment? West Coast, East Coast, or Midwest?
None. I believe the Southeast is the future of real estate investment because the population is fleeing West Coast, East Coast, and Midwest, well, cold Midwest states for the Southeast. I follow population growth. It's the smile of the United States that is winning, except for California, which is losing, right? So there's this concept of the smile of the U.S., which goes from California on the west all the way up to North Carolina on the right side, on the east side. And so that southeast and southwest area, that's where it's mostly the Southeast that's winning the real estate game.
Okay. All right, then, for the person who asked about North American Savings Bank, it just somebody had a comment said that they've been very good for them. So, all right, that looks like that's it. Neal, as always, we appreciate your presentation. Everybody, we'll be back next month for another educational webinar. All right, well, okay. We got another question. Is there a state in the Southeast you're talking about?
Well, Texas is always a default. Texas, Florida, now North Carolina. North Carolina is a very powerful state to invest in. I unfortunately haven't been able to find a lot of investments there. Some of my investments are in North Carolina, but NC, Florida, Texas are really great states. Georgia is phenomenal too for rental property.
Okay. All right, very good. Neal, thanks. It was great. Appreciate it. Stay safe, everybody. Stay healthy. And
Thanks, everyone.
Look after everybody that's important to you. All right.
Thank you, everyone. Stay in touch. We'll see you at multifamilyu.com. Thank you.
All right.